Thank you so much. Welcome. I'm your presenter, Rasto Asienga Malimcheche. We are continuing with the topic on budgeting, and today we are looking at process of budgeting. Process of budgeting. When we're talking about process of budgeting, this is a financial resource management through the process of monitoring and evaluation of spending of resources available through logical framework stroke tools to keep record. So when you're talking about process of budgeting, it's a financial resource management. This helps us to be able to monitor and evaluate how we have spent our resources. So this is done after we have the resources. Then we are able to go through and show the way we will be able to process our budget. We'll be able to process our resources. How will you monitor? How will you evaluate to see how the resources are being spent through the available workable tools or logical framework? That helps us to keep the record of finances. For example, you have tools like receipts, tools like payment vouchers, orders, invoices, and etc. There's so many tools we can use to capture the expenditures and the income of how we receive our money and use our money. So that's what we talk about the process of budgeting. So under process of budgeting, we have what we call financial resource management. Financial resource management. This means that planning and controlling income and expenditures and making decisions that will help the organization or the company or the project to survive financially. So the organization board or committee is responsible for managing and protecting the assets. So when you're talking about financial resource management, it means we plan. You have to plan and control your income. Income must be controlled. How you get your income must be controlled, and the expenditures must be controlled. You don't just use money anyhow. It must control, and this will be done through decision making. Someone can just not come there and just use the money you want us to use. It must have a decisive decision agreed upon how the money is being to be used according to the budgeting, how the budgeting is laid down. That's what should be done and followed. So you cannot do anyhow, and this helps to make the organization survive financially. If you don't have a budget, you just spend money, and then at the end of the year you have nothing you have saved. The organization has nothing you have saved. It has no recurring money for the next year. So starting January of the next year, you have no even salaries to pay your staffs because you did not organize, you did not budget. And therefore you do not have control of your income and expenditure. And that's the responsibility of the committee or the boards of directors. That's their responsibility, or the partners. That's your responsibility to be able to make sure the resources that you receive, the income, is well managed and protected, and all the assets are protected. So under financial resource management, we're looking at financial responsibility. What are the financial responsibility? Number one, budgeting. Budgeting. And this under budgeting, this is also the work, the cost, source of the funds. So the work, what work is to be done? What are the cost of those works? And what is the source of funds? Where will you get the funding? Where will you get the income? Where will you get the capital to be able to run the affairs of the organization, the company, whatever? Like a company can get capital from selling raw material or processing raw material or giving services. The same with organization. And then we have resource mobilization. Under financial responsibility, we have resource mobilization. Ensure you have enough funds for activities. Sorry. Ensure you have enough funds for the activities. So you have to do resource mobilization. You have to mobilize resources for the activities that you have laid in your budget. And then you must make sure there is risk management. Safeguard resources and use for approved guideline only. And then make sure you have cash management. Meet obligation on time and pay on time. Always make payment on time. Don't delay in paying your staffs, the activities, whatever contract you have. Do not do a mistake of not paying on time. Let everything budget and pay on time. And then have record keeping. Document all funds that comes in and go out. Document. And here is the problem for many people. Most people don't document their funds. They don't write down how much did they receive, how much have they used, what is carried forward. They don't. And this is a very mistake if you have a project or organization and don't do that. And then we have reporting. Provide financial information on timely basis to relevant people, institutions, and donors. Reporting is very important. You can do it weekly, daily, weekly, or monthly, or quarterly, or once in a year. You summarize all your income and finances, and you show your impact report. What you achieved, what was planned, what was done, and what you achieved. It's very important because this one builds trust on your staffs, builds trust for institutions, builds trust on donors and the government. So you make sure that the reports are available, not hidden, available. Let your staff know how much the company, how much the organization received this year, how much it did spend, what was carried forward, and the donors, and it will build trust on you. So report is very important. And then we have monitoring. Monitoring ensure income and expenditure are in line with budget. You monitor to ensure they are in line with budget. Yeah. And then we have control. Income and expenditure always in line with the budget. Control. Yeah. As you call on financial accountability under financial resource management, on financial accountability, when you are processing our budget, you make sure that the money you are using is held in trust on behalf of the community beneficiary to yourself. The money you are using is held in trust of community or beneficiary that you are serving. Yeah. And then another thing, the money is not personal possession of the board, official, or members. Yeah. This is not your money. If it is a company, it's not a money. It's company's money. The company that you have registered. Even if it is you are the proprietor. You started a school and you are a proprietor. Have your own salary. Yeah. Let the company you started pay you as a proprietor. Yeah. As a salary for the work you are doing for that company. And then when you make profit from your services or your sales, make sure the profit you have something that you carry forward for operation of the company or organization. And then you have certain amount goes to the saving for any emergencies, even for your good send off in future. Yeah. You see, we are getting old. You may get old, you have a company, and then your son takes over. If it is a sole proprietorship issue for an NGO, there's another director comes in, chairman comes in, like that, they come in. So when they come in, you have something they will send you with, yeah, for good managing of your organization. Also, make sure that you are expected to account for how much money is used. Account for every income and expense that is used. You are also expected to demonstrate that the money was used to benefit intended beneficiary, used for the purpose it was given. Yeah, when you are given money, use it for the purpose that it was given. So under financial resource management, financial accountability, who are you accountable to? Yeah, you are accountable to donors, to community, to the government, the beneficiary, members, and other stakeholders. Yeah, other stakeholders. So, under financial resource management, financial accountability, to be accountable, you need to prepare and maintain adequate and comprehensive information about your budget, cash flow, income and expenditures, assets, and liabilities. Thank you so much. Thank you so much for following me, Mwalimu Cheche, Rasta Sienga, and support this work. Thank you.